This is the Blockchain Real Estate Podcast, sponsored by the Blockchain Real Estate Summit. If you're interested in the intersection of real estate, blockchain technology, AI, and more, you've come to the right place. Don't miss your opportunity to attend the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. Enjoy the show.
Welcome to Chicago Blockchain Real Estate Collective. We have an exciting guest here today. Just wanted to give you a update. I'm flying solo today. Our normal host, the voice of Liberty, Adam Carswell, is indisposed tonight, so I'm gonna have to do this. So if there are some technical glitches or things like that, we're working through it because he's a professional and I just play like I'm a real estate investor. So, but with that, really looking forward to this guest tonight. One of the things that we at Liberty Fund, when we started investigating, how could we do a real estate on the blockchain and how could we make real estate more liquid? We learned that there's these things out there called automatic trading systems. And it's going to allow private real estate investment and all kinds of other, normally like hedge funds, venture capital and all the rest of that are normally very illiquid, more liquidity. So with that, we have Pat LaVecchia, and Pat is the chairman of Oasis Pro Markets. It is the first U.S. regulated alternative trading system. It's authorized to allow its subscribers to trade digital blockchain securities, also digital, known as digital assets, and make payments. Pat has had a 30-year career in the capital markets, and he was just telling us that he started out was it Bear Stearns, Pat, or is it just Bear? So at the time,
Bear Stearns. I'm not that old.
Okay.
But yeah.
I can't remember when the mergers, all I remember is when E.F. Hutton talks, people listen. So, but so Pat has been, doing all kinds of, transactions, over 150 companies, over $20 billion of transactions. And we are excited to hear him because he's not only at the intersection of blockchain securities, but also what you would call fintech. So with that, Pat, I'm turning it over to you.
Terrific. Well, thank you, Michael, and thank you for the invite. It's a real pleasure to be with the Chicago Blockchain Real Estate Collective here. And thank you to both you and Courtney for bearing with us this evening and accommodating my schedule as well. Looking forward to an active discussion. And but before we get started, I thought it might be helpful just to give a quick overview of Oasis Pro Markets. And Courtney, if you could share the presentation, that would be great. Terrific. Great. So you are the first group to actually see our new logo. So, please let me know what you think of it. Our old logo looks like Cisco's logo, so we made a change there. So we're a group of primarily veterans from trading technology and capital markets. Michael had mentioned my background, which was Credit Suisse and Bear, now JP Morgan. But we have team members from the New York Stock Exchange, RBC, Morgan Stanley, B of A, Gain Capital, which is a big player in the FX field. And we also have DeFi experience. DeFi is decentralized finance, which is a growing aspect of crypto, and specifically experience with MakerDAO, which is one of the granddaddies of the DeFi world. Very deep relationships with Maker, as well as many of the other DeFi projects like Aave, Uniswap, et cetera. Now, as Michael had mentioned, we're the first ATS. We're not the first ATS approved for digital securities, but rather we are the first ATS that was approved for digital cash, which is we define as stable coins, which I'll get into in a moment, as well as CBDCs, which are central bank digital currencies. And if you've heard of that, currently there are betas all over the world, Australia and China, Turkey, and a host of other countries. This is dissimilar from what El Salvador did recently with Bitcoin. You may have heard that they're actually utilizing Bitcoin as currency now in El Salvador. CBDCs are basically, the concept is that they will be issued by central banks, and the EU is experimenting as well right now. And it is a bit of big brother, but it is coming. China's done it in about 5 cities of over 10 million apiece. And the idea is you have a wallet or an account with the central bank, and the payments into your specific wallet or payments out are through these CBDCs, which can be traceable, it's immutable, there's a record of where the currency is, that it was transferred, et cetera. But the benefits, which I'll get into it a little later, of both stablecoins and CBDCs is transactions take seconds rather than days. So if we can jump to the next slide, Courtney. So the way we look at our the current spectrum is that our focus is to bridge traditional finance with DeFi. Now, why go down this path? Number one, blockchain. I'll just give a quick overview of the benefits of blockchain. So the current U.S. Capital market system for securities is really based on 70s technology. DTCC was established in 1973. Prior to the DTCC, which is the Depository Trust Corporation, just for equities, settlement times were over 7 days because it was all basically with runners on Wall Street delivering paper securities, et cetera. 1993, it went to T+3. About 4 years ago, 3 years ago, we moved to T+2. Again, this is just for equities. And DTCC came out recently and stated that their target is 2023, 24 to get to T+1. That's equities. And it's based on this infrastructure from the 70s. For fixed income today, asset-backed securities today, it can take anywhere from T+5 to T+10. So it's a very antiquated system there as well. What blockchain does is removes those settlement times as well as counterparty risk to almost zero on both fronts. So counterparty risk, if you're trading securities or receiving cash, you know who the other party is. We're regulated here in the US, so we require KYC AML. We talk about real-time settlement. We can actually, our current system can actually handle milliseconds of real-time settlement. In regards to private securities, that's not as important, but in 10 years, 5 to 10 years, it'll be ubiquitous, this particular approach. And DLT, digital ledger technology, and blockchain, in my opinion, will be the predominant technology used for the capital markets. There's also built-in compliance through items or coding called smart contracts. I'll talk a bit about that. There's reduced back office operations. So we're focused on real estate today. So I'll give you an example. We've been in discussions with a number of public REITs as well as private REITs and great companies like Michael's company and Liberty. And as REITs, the savings on back office operations, which is basically maintaining cap tables, sending out dividend checks on time, and maintaining all those records and compliance, can be reduced by 25 to 35 basis points of the issue size, which if you're raising substantial amounts of money, does add up quite quickly. Additionally, since We allow digital cash. We also allow fiat on our particular ATS, but we're primarily focused on digital cash. The distribution of dividends for REITs, private or public, can occur from the treasurer's office or the CFO's office, all from a wallet. The information is the information is readily available because from a cap table standpoint, as trading occurs, there's real-time cap table updates in regards to who your holders are. Again, for private securities, seconds, milliseconds probably doesn't matter. For public securities, it does. But at the very least, for private real estate securities, by end of day, you would have an updated cap table, which we believe would allow for these types of savings on the back office. And those are just our estimates. We've heard up to 80% back office productivity gains as we've been speaking specifically to potential issuers. Courtney, if you could jump to the next slide, please. So here are some of the advantages. I've already touched upon some of them. Liquidity for both private and public companies on the real estate side, utilizing DLT, stable coins and blockchain technology tied to digital cash. And in a year's time or two, what we're hoping is digital cash can also be defined as Bitcoin, ETH, Litecoin, and other cryptocurrencies. Today, we are not going to press that envelope with the regulators, but we believe in a year or two, there will be that ability. What that does also for a real estate issuer is with stable coins, for instance, today, you also are opening up a potential market of crypto investors who would like to diversify into real world assets. That's the big movement today in the crypto world. You don't really hear much about it in regards to the business media, but with the focus is primarily on Bitcoin and the volatility of Bitcoin. But there's a movement to utilize these applications and technology for real world assets, such as digital securities. So one example I'll just share with everyone here is if you have Bitcoin, for instance, or ETH, or another cryptocurrency or token, there's an ability through DeFi to collateralize it. And by collateralize it, I mean, you don't have to sell it. You take it, you put it into an application like a MakerDAO or an Aave or a Compound, assuming it's been approved, that particular token. So you're basically margining your holdings on a peer-to-peer basis. There's no intermediary. And you're able to take stable coins out of that. So you basically collateralize your token like a Bitcoin, and you receive stable coins. You receive stable coins back. You can then take those stable coins and utilize that on an ATS such as ours to buy and sell, to trade real world assets without a taxable event. What I just took you through, there is no, I'm sorry, is that me? I'm just hearing some background noise. Is that, okay. So the benefits of that is no taxable event, an opportunity for a crypto holder to diversify their holdings into real world assets, such as a real estate security or an asset-backed security, and the ability to, from an issuer standpoint, to increase potential liquidity as well as your investor base. So that's an area that we're spending a lot of time in. And our particular ATS is being built to allow for DeFi collateralization to be a part of it. It's early now. We're launching over the summer. So we're launching quite soon, and we'll have a lot of news announcements about it as we continue down that process. Courtney, if we could jump, go ahead.
Yeah, I just want to stop, Pat. That is like such a cool thing. That was one of the things that we saw like last year, and we put together an agreement, an affiliate relationship with BlockFi, because what we have been explaining to investors, and a lot of traditional real estate investors, it's hard to get their mind wrapped around it, but it's like, if you want to take your distribution in USDC, which is US dollar stablecoin, you could actually take that distribution and then deposit it in BlockFi. So you're not only getting the benefit of the super stable real estate and the regular monthly payments, but then you can actually supercharge your investment. And I think BlockFi right now is, on USDC is, I think, 7.9%, or somewhere around 8%, interest on top of that. So, and as you said, the other thing that we've talked to them about, we've talked with Ave and some other people, once we get a net asset value and they're comfortable with that, they could actually leverage, instead of having to sell position out of Liberty Real Estate Fund, they could actually leverage that perhaps 50% and free up some of that cash for other investments too. So really just exciting stuff. Now I'll shut up.
No, exactly. And so the example that your last example, exactly what I was talking about. And in regards to the distributions, that's the other benefit in regards to stablecoins. Very attractive returns in comparison to real world, by real world meaning fiat returns. And the reason that they're paying, I'm just going to tie this together for everybody, why you're able to get 4, 6, 8%. I think USDC right now on Coinbase is like 2 or 3, but BlockFi is much more attractive, is because of this demand for collateralization. So if I'm going to collateralize, I may be paying 12% on an annualized basis, but I may believe that Bitcoin's going to go increase by more than 12% over the next 12 months. So I'm willing to take that risk and pay that specific interest payment. And then a group like BlockFi or some of these other protocols have the ability to pay out 8% because they need the stable coins for collateralization. So it's all tied together. Excellent point. And it's very exciting. And most people don't understand this, but once the ATSs have the opportunity to work DeFi into their trading systems with the regulators' blessings, it's going to be revolutionary. Courtney, could you jump to the next slide, please? So in regards to our specific ATS subscribers, and again, an ATS is like an exchange, but it's not national market. We're a matching engine. So if you're familiar with OTC markets, et cetera, it's that type of process with the order screen, bid screen. You have the ability to see all the orders for a specific security. So our focus is institutional investors, accredited investors, as well as broker dealers. Through the broker dealer networks, we have retail investors have access to trade on our specific ATS as well. And so what we haven't included here is these are traditional investors, traditional real world investors. Crypto will be a part of this as well in regards to the attractive opportunities. Next slide. So I mentioned earlier smart contracts, and this is tied a bit into Michael's points earlier. So smart contracts are basically coding. So you're an issuer and you have, whether it's equity, fixed income, the benefits on fixed income are even more attractive from a back office standpoint for interest payments. We believe the savings can be anywhere between 25 and 50 basis points on the issue size for for fixed income and ABS instruments, but it's basically coding. So if you think of it as coding, you as the issuer can code anything you would like. You could code, we can only have 99 investors at any one time. So rather than, so there's liquidity, there's trading, you 99 is a small number. So let's say it's 1,999. So you're below the threshold from an equity standpoint. So that's basically built into the coding. And rather than hiring attorneys, having back office whenever a trade occurs, it's all built into that particular smart contract. So if I already own, as an example, if I already own XYZ security, there are 1,999 of us trading it on a regular basis. Michael would like to purchase it as a new investor. He would not be able to. He would not, because of the coding in the smart contract, until someone else liquidates their entire position, that Michael wouldn't be able to come in. That's just one simple example of what an issuer can do, and the savings, the savings on the back end. In regards to just back to dividends from a real estate standpoint, let's just talk about dividends. It's fully auditable. It's immutable. The blockchain is immutable. The way our specific ATS works is we're completely off-chain. That means not on the blockchain until a transaction is matched and consummated, so that an exchange has happened. And what's called an atomic swap. I'm not going to go into details of that right now, but it basically happens almost instantaneously. Then the information is on the blockchain. So it's an immutable record. So if a particular investor in your private REIT or in your fractionalized real estate offering, whatever it may be, or fund, suggests that they didn't receive a certain payment from the issuer, you have an actual record of everything that's occurred. So it's completely auditable. Increased liquidity. What we believe is that with the advent of digital securities and these streamlining benefits that I've mentioned, that there will be more comfort in investing in particularly private securities, and because all that paperwork will be built into the coding, but it's also available for review. So going back to the financial crisis as an example, and the CLOs and the mortgage-backed securities issues that occurred back then, there was no real-time data, as many of you may recall in 2008. There was very poor documentation. It took weeks to find out, for example, that AIG was levered by multiples to Lehman Brothers, and with digitization and the advent of blockchain technology, that wouldn't occur. There is an ability for transparency, because all the transactions from a matching standpoint would be on the blockchain. And I apologize if I'm getting too technical here, but I think what I want to convey is that through these smart contracts, this coding, all the information is available, so that from a diligence standpoint, any investor would be able to do proper diligence based on the coding of the smart contract and other information that would be provided. So I mentioned cap table management, I've mentioned increased liquidity, global transfers. So our vision is that our particular ATSs and other ATSs out there will be 24/7 and on a global basis, potentially working with other digital ATS types of equivalents in Asia, the EU, Africa, South America, the UK, and the Middle East. So we certainly believe that would occur. Because of the utilization of stablecoins, as well as the fact that that we're trading digital securities. Transactions on a global basis, again, I mentioned T+1, T+3, T+1 is coming. These would be in seconds. So if you're doing a wire today to, let's say, someone in the EU, that may take 3 days on the SWIFT network. Could potentially take longer, or in Asia. On our system, it'll be almost instantaneous. And whether it's fixed income, ABS, et cetera. And again, it's up to the issuer. If the issuer wants a end of day calculation, we're able to do that as well. But the beauty is that from an investor standpoint, when you sell a security, you have a high degree of confidence you'll have access to that particular stable coin or digital cash almost immediately. And we believe due to that, that liquidity will only increase. And all that being said, we're in the early days of digital securities. I estimate we're probably, and I don't know if Michael would agree with me on this, I think we're probably where cryptos were about 5 years ago. So we're not at
Pat, I would agree with you. I mean, you know, I don't think people have really figured out the promise. I will say that I can see larger institutions now really interested in it. And just an anecdote, I was at a security token conference in London last year in February, and I was sitting with the guys from Morgan Stanley, I was sitting with the guys from Credit Suisse, and I was sitting with the guys from Deutsche Bank. And one guy that was really active in the blockchain space, I'm like, well, it looks like that's, a good sign. And he says, oh, those guys, they don't actually do anything. They're just kind of there as like, so that the CEO can kind of point to them and say, yeah, we've got a blockchain thing going. And then I was talking to him probably around September. I said, hey, all those guys at that table, I'm sure they're really busy and on a first name basis with the CEOs after what happened with, all the digital assets, including Bitcoin. So, and then the one more point I wanted to make with when you were talking about Lehman Brothers and that, an even, more relevant case right now, everybody, if they heard about GameStop, GameStop couldn't have happened if they were trading on digital securities.
That's absolutely right, because of the real-time settlement, and that was the issue with the DTCC. One other point, just following up on your comment, Michael. So there's an issue of credibility at times with crypto. We've been having discussions for the last year and a half with a number of large custodians. I'll throw out names. That doesn't necessarily mean we're speaking to them, but we're speaking to a lot of folks. But like along the lines of Boney, State Street, Fidelity, on the custodial side, large banks, Goldman, HSBC, Santander, all these players and others like them, all have have directed individuals to focus on DLT and blockchain and the opportunities potentially for the bank. Without naming names, I'm familiar with one of the largest banks in the world. In the FX area, they've had their own internal DLT blockchain. So it's a private blockchain, so it's not public. And over the last 4 years, they've conducted over $4 trillion of transactions internally. So that's their beta. And when the tipping point comes, in a variety of different securities, FX on the commodity side, et cetera, they'll be able to make that transition very, very quickly. The exchanges are doing the same thing on a global basis. Global exchanges are spending a lot of time here. So if we're, Michael and I agree, we may be where crypto was about 5 years ago, but a tipping point will occur. And if you're considering this from an issuer standpoint, my pitch would be, if you're uncertain about the reaction, that a dip your toe approach. Now, Michael's all in. So, for him, he's completely all in. But a dip your toe.
I'm in a little too early, but it's going to catch up.
Yeah. No, well, not only that, but you'll have the advantage of being in early. So, which is, again, that transition from crypto, accessing crypto investors to real world assets that I mentioned earlier. But dip your toe, $20 million, $100 million issuance or larger, or, something in that range, to see the cost benefits. We're in discussions right now with a private REIT. It's tied to a multi-billion-dollar private REIT operation, and they have indicated to us that they've already raised the money because they've been in these markets for a long period of time, and they're moving ahead with a private REIT issuance, digital security, because they've spent at least a year exploring it, and believe that the cost benefits, the risk and the cost benefits outweigh any risks that may be tied to this new technology, which are very minimal. Again, because the information is transparent and easily available. But there will be a tipping point. And when that tipping point happens, our ATS, other ATSs, the exchanges, fixed income equivalent ATSs, et cetera, you will see just a tremendous amount of issuers. I remember ETFs. ETFs came out in 2004, and they were just a tiny part of the market. Today, 15, 16 years later, they represent 80% of the market. And ETFs were, they moved to that tipping point. Now, these were passive ETFs initially. Now there's a combination of passive and active. But I equate that particular growth of a new product to what's occurred with ETFs and REITs. I mean, REITs are another great example. The REITs were established in the 80s because of the tax law changes, but they really started taking wind in their sails in the 2000s and then grew exponentially. So, this is the way to think about this technology is it's not a revolution, it's an evolution. It's basically beyond that, Wall Street always figures out how to take new technology and opportunities and monetize it. And that, basically that's what's happening here. But the efficiencies are across the board from the issuers to the investors are tremendous. Courtney, if you could jump to the next slide.
Well, and Pat, I'm waiting for you to list the first Bitcoin ETF.
No comment. But when it happens, it'll be very exciting. And let's talk offline. Well, we can chat about that too. But before we get to that, stablecoins. I mentioned stablecoins. I've mentioned them several times today. So USDC, DAI, there's JP Morgan coin. I gave the example of the $2 trillion, which is not JP Morgan, but the bank that has conducted $2 trillion of internal DLT blockchain FX transactions. Well, JP Morgan has done something similarly, which is basically to bypass the SWIFT network for internal purposes using the JP Morgan coin. So again, this has been around for a couple of years at JP Morgan. It's, from my understanding, it's doing quite well. So it just reiterates to me that the large banks, the credible institutions are all over DLT and blockchain, but it's being done behind closed doors until the tipping point occurs. in regards to stablecoins, which may be a new term for some of the listeners and participants today, it's quite a large market. It's over 100 billion. I think today it was like 112 billion. USDC is in it. DM, which is not available yet, but that's Facebook. That's Facebook's Libra project, which you may have heard of. And, basically, DC really made it difficult for Facebook. They've geared it back to basically be a stable coin in regards to a basket of real world securities. And that's coming. Now, they have billions of subscribers. And the opportunity to use DM to purchase goods and services through Facebook, it's going to become, quite a large. You have a level of confidence that it'll become quite a large digital cash component. So that's not even in that 100 billion because that hasn't been launched yet. There's also USDT, which is Tether. They're the largest stablecoin. A bit of controversy, but it seems that that's gone past them after a settlement with the regulators. But the market cap of the stablecoin market, a little over 100 billion. Today, Tether traded over 750 billion in a 24-hour period. It's not the multi-trillions of dollars of FX, et cetera, but it is growing at a substantial rate. And again, the adoption is there. Additionally, the last thing I would say is that credibility and comfort, because many of us have read articles about someone losing their keys and they had billions in Bitcoin or millions, or that there's a lot of fraud and hacking in this particular space, which is all true. But that being said, those are to date, I think those are the exceptions. This market has been growing quite substantially since 2016. And there have been announcements from Morgan Stanley allowing several of their funds to invest, BlackRock in Bitcoin and ETH, BlackRock doing the same, Fidelity and State Street announcing units focused on this area, and again, accepting Bitcoin for their institutional clients, not necessarily retail. That the big players are getting involved, and despite the volatility, and I'm not going to make any investment recommendations here because crypto is very volatile, but the approach that a lot of folks have been taking I hold in high regard is that their view is that crypto in a decade will be much more prevalent and mainstream. And they view that certain tokens, some of which I've mentioned today, will appreciate in value over that point in time. But again, utilizing those assets to what Michael and I said earlier, collateralizing them, not selling them, and then taking those particular stable coins and purchasing, trading, et cetera, in real world assets, it's going to be very exciting times. So
yeah, no, I want to actually reiterate when you were talking about how long it takes to get a bank wire. We had to send a wire to Dubai, and they said, we need to see confirmation of it because we're not going to see it for 7 days. The wire actually got lost. And, if we would have been doing it in USDTC or USDC, it would have been instantaneous. They would have known, more than likely within an hour whether the money is there or not. And there's a lot of corporate treasuries that are now transferring, as you had said, globally, using USDT or USDC.
Yeah, I made an investment today in a a company based out of Norway. I had an opportunity to invest, and I signed my documents and funded it, and they received the funds within 10 minutes. And the cost for me on this particular investment, which was in the thousands of dollars, was $2.
Yeah. So Pat, I think we're gonna get close to wrapping up. How many more slides do you think you have?
We're done.
Okay.
Perfect timing.
All right, fantastic. Well, this was even more than I expected with the amount of stuff that you guys have going on. It's like really cool. It's some of the stuff that we see and we see in the future. There was one question in the chat, and I'll read the question for you, Pat, and I can kind of answer this, and then you can too. Would collateralizing a real world asset count as a security issuance? If you're just taking your asset and not, doing a joint venture with other people investing in it, it's not necessarily a securities issuance. So if it's just you privately, it doesn't meet the Howey test. But Pat, you can follow up with that.
Yeah, I would agree with that. You're not transferring title, so it's not a securities issuance, and you have the ability to upon payment of the interest, take it out of that collateralization pool. The only time, and this is the tricky aspect, is these are collateralization pools. So if it's, let's say, 50% LTV, and it drops, the value of that real world asset drops 50%, or some number along those lines, then a liquidation event could occur. So the process of that liquidation event would require that you as the holder agree that if you don't provide more collateral or pay the interest and take your particular security out of the pool, that it will be liquidated immediately, so that the funds can be dispersed. But it's not a securities issuance because no one takes title to that particular security except for yourself. That's our understanding.
Okay, Pat, when is all this coming down the pipeline for non-accredited retail investors? Is it more than 1 year? Well, I can say that if it is issued today, and it's a 506C or a 506B, then it is for accredited investors. You can also do a Reg A, which would allow retail investors to do it. So I know Exodus, and I don't know if you guys are working with those guys, but they did an IPO as a digital security token, and it was a Reg A. So they were allowing that. But even if it's a 506B or a 506C, after a 1-year lockup period, it can trade to non-accredited investors. And Pat, can those non-accredited investors after 1 year trade on Oasis Pro Markets?
First of all, I agree with everything you said. That's all accurate. Through their broker dealers.
Okay.
So we're signing up broker dealers. So and we can also do public over-the-counter securities. So when we have a public over-the-counter security, and let's say you have an account with broker dealer ABC, you'll be able to trade through that particular broker dealer who's a subscriber to our ATS. Regarding our specific ATS, the compliance with retail is quite tremendous. So we are a year away. Other ATSs in this space handle retail today.
Okay. And I've got one question, and then we're going to go to some of these. But do you have a particular blockchain that you're working with to do all your stuff on?
So Ethereum is initial. But by the third, fourth quarter will be most likely, I'm just going to throw out, names like Tezos, Algorand, Avalanche, Solana, Cardano. We'll be working across the board. We are going to be completely agnostic to the underlying protocols.
Very cool. That must be a lot of technology on your part to set this thing up.
We've got a great team.
And then Raymond asked, what if there are multiple retail investors involved with the collateralization of a real world asset? Are you simply using LTV as the valuation basis? I'm not really, I don't really understand what you're asking. Can you ask that, audibly, and maybe we could understand it a little better? It's D Talbot.
Yeah, that's me. It's Dawn Talbot. Yeah, I'm not sure I understand your space, so I don't want to imply that I do completely, but when I've looked at mortgage-backed securities and asset-backed securities and blockchain prototypes in the past, there were a couple of issues that popped up, and one of them that was a consideration was the whole seasoning concept, and what's the history on these assets, and are they paying, or are you just looking at assets that have such a phenomenal value in and of themselves, they're beautiful or strategically located and have an innate valuation where LTV is the only thing you're considering? And where does that information flow? I mean, that's market data that an investor would need, right?
So there are two different areas here. One is listing for trading, and there's a due diligence process for that, Donna. And in regards to the LTV component, which is the collateralization in DeFi, the majority of these DeFi projects are set up for governance. So basically, the holders of that particular token can vote on what real world assets can be collateralized or not. So the information flow that you're discussing or asking about is done through that governance process. So, MakerDAO has a governance process, Aave has a governance process, these others, Compound, et cetera, they all have governance processes in regards to which real world assets or cryptos, they started off collateralizing cryptos, would be allowed on their particular system. And that information is shared, and then it's voted upon. The way the votes are handled is based on the number of tokens of that particular governance protocol that you hold, if that answers your question.
Yes, thanks.
Yep. And happy to follow up as well.
And then Danielle is asking about your thoughts on the Polkadot blockchain.
Yeah, Polkadot is very exciting because it's working across protocols, and from a tech standpoint, our tech team is quite excited about it. So we're spending time on the Polkadot protocol. We're also excited about Layer 2 and ETH 2.0, which should have quite the movement to staking. That should have a tremendous impact on gas fees. And we haven't gotten into gas fees, but think of that as, not a transaction fee for a trade, but more along the lines of a fee to utilize the blockchain. And at times those fees have gotten very high through what is called miners, and there's an issue with China. Many of the miners are in China. Elon Musk came out recently and said they're big energy users, even though if someone did some real digging in China, most of them are hydro or solar energy users rather than traditional electricity. Yeah, we're excited about all the protocols. They bring so much to the table, and we're privy to some R&D going on at a variety of protocols that will will reduce potentially over the next couple of years all these costs that we're talking about down to almost zero.
And then I skipped Raymond's because he had a follow-up question, and I thought we had answered it. But what disclosure is provided on the asset? Is there a payment history, or are you simply using LTV as the valuation basis? I'm going to speak first from our experience, Raymond. And the disclosure is that there's regular reporting to the investors. Then there's with our fund in particular, it's a quarterly net asset value valuation, and there's also the initial disclosure, which is that some of the stuff that Pat and Oasis Pro Markets does on any issuer, which is looking through the PPM, looking through track records, and looking through that type of thing. So I'm hoping that answers your question.
Hey, Michael, it sounds like maybe you got the, yeah, you read someone else's question with my name, but my question was.
I apologize. You know what? I might have read Dawn's, but I apologize. So why don't you ask your question? I'm sorry, Raymond.
Sure, 100%. Mine was sort of kind of the inverse of what Throne Capital had asked. I said, what if there are multiple retail investors involved with the collateralization of a real world asset? Now, would that be considered a security issuance?
So going back to the collateralization, and this is away from the ATS, right? Because we don't collateralize. This is utilizing DeFi, Raymond. That again, because there's no title with fractionalization. So if we take equity, and if we take a Ferrari, for instance, this is occurring with NFTs. And Hester Peirce, one of the SEC commissioners, came out, and her belief is that these are equities. So if you take a Ferrari and you sell shares in that Ferrari, as an example, that could potentially be viewed as a security. That's one example, and it's really tied to NFTs, which have just exploded in the last 9 months or so. So that's certainly, in my opinion, and I'm not an attorney, but based on the discussions I've had, would fall into the area of securities. In regards,
what about with properties?
Well, Raymond, can I just so if it's if we're buying a property together, and there's a joint enterprise in that. That would be a security. If it was just me buying the property and then I put 75% loan to value on it, it's not a security. And then the collateralization part that Pat is talking about is that, let's say me, you, Sharon, and Daniela all went in and bought shares of a particular real estate investment trust, or we bought shares of Liberty Real Estate Investment Fund. Each one of our shares, we could collateralize those shares on our own, which would not be a security. And then Pat is going to clean up, what I just said.
Yeah, that's absolutely right. So collateralization, no matter how many individuals, institutions, et cetera, are part of it, there's no transfer of ownership. So I would agree with Michael's examples.
Thank you.
Sure.
Yeah.
Here, I'll give you another example. Fixed income. Their corporate bond issuance are certainly securities, but loans, loans which are syndicated are not securities. So that's just another example for you. They don't take title necessarily, but are providing, based on some type of collateral, or these days no collateral on high yield, but they are, providing funds tied to maybe a cash flow base, et cetera, or hopes of.
And I think with that, we're going to wrap it up because we really respect everybody's time. We thank everybody for coming tonight. We especially thank Pat for coming, and glad he could make his anniversary tomorrow. So, so we're very excited about that too. Really appreciate the insight. I've learned, a lot of stuff, and I thought, I had known a lot of the things that were going on, but every time I've talked with you, Pat, and the other people over at, Oasis Pro Markets, you guys are so far ahead of, what's going on in securities and all the rest of it. And so eventually the rest of Wall Street is going to catch up to you, but they're going to have to sprint hard. So thank you very much.
I appreciate it. Thank you for the kind words, Michael. It's been a real pleasure. And again, happy to follow up with anybody. I really appreciate it, Michael. Have a good night. Thank you.
All right. And if anybody needs to reach out to Pat, Pat, is there a place where you want to direct them to?
So yeah, I'll just share my email. It's pat@oasispromarkets.com.
And so it's oasispromarkets.com is your website if they wanted to learn more about what you guys are doing and all the rest of it. That's great.
Yeah, absolutely. Yep.
And if anybody wants to know anything about what we're doing and where we're at with Liberty Real Estate Fund, you can go to libertyfund.io. We encourage you. We've got a lot of information there, and we've got all the backlog of Chicago Blockchain Real Estate Collective meetups there. And the other thing that we are doing, and we're just announcing it this week, we've actually had it in the plans, is we are doing the Blockchain Real Estate Summit on September 9th and 10th in Austin, Texas. And we're going to have a lot of really great speakers, people like Pat, people that are in the securities industry. We're also going to have a lot of capital raisers in the real estate industry, because we're really trying to just bring more education and get more real estate assets onto the blockchain, because that, is the way this industry is going to grow and prosper.
Absolutely.
So that's blockchainrealestatesummit.com. Thank you very much, and good night, everybody.
Thank you, Michael, Courtney. Thank you, everyone. Bye-bye.
Thank you for listening to the Blockchain Real Estate Podcast, hosted by the Blockchain Real Estate Summit. Don't forget to sign up for the Blockchain Real Estate Summit 2024, happening this September 24th through 26th, online for our worldwide audience. Get your tickets at blockchainrealestatesummit.com/registration. If you enjoyed today's episode, please make sure to follow the Blockchain Real Estate Podcast on your favorite platform and leave us a review. Your feedback really helps increase the visibility of our show, allowing us to reach more listeners like you. If you have someone in mind you would like us to interview, you can go to blockchainrealestatesummit.com and leave a comment.
Hi, this is Adam Carswell, the voice of Liberty. This podcast is solely intended for informational and entertainment purposes only and is not intended to provide tax, legal, investment, or accounting advice. You should consult your own tax, legal, accounting, or investment advisors before engaging in any transaction or undertaking. Thank you for listening to the Blockchain Real Estate Podcast, which is a part of the Blockchain Real Estate Summit Network. Go to blockchainrealestatesummit.com for more information, free reports, and giveaways with free stuff. Thank you.